Good morning, guys. Now, today we have looks like a big problem in the market. You can see Bitcoin is down, oil is down, US market is down, YM is down, Euro Yen, Aussie Yen, Pound Yen, and CAD Yen. And I guess the coronavirus news for the last 24 hours all over the place. So you can see when you have the yen is green and everything else is red, this means we have a big problem in the market. So now the question is, a lot of people in UK in holiday, a lot of banks, they off today and tomorrow they work in half day. So I'm not sure if the liquidity is going to be issue when we have a big news on the market. So just be careful today if you're trading, because the move can be very big. Like we drop in Aussie yen about from 83 to 81. It's almost 180 bips. I remember a day like that when you have a big problem in the market, Pound Yen can drop 600 pips easy. Now ES, every point is $50, $50. So if we drop 300 points, this means 15,000 in every trade. So just be careful today. If you are new in the market, you stay out of the market, because today this is not the day you trade. If you are new, you need to be very professional. You need to have automated the stuff, so in case if the market goes crazy,
We've been setting up for a big market event this morning around this new COVID variant that the WHO is concerned about. It has triggered a series of border closures to a number of countries on the African continent. So the market, again, reeling. Don't forget, if you think about one of the big concerns as we were moving throughout the pandemic, it was around a super variant, one that could evade vaccines that would be highly transmissible across populations. This is one of the chief concerns of the market at this stage, still dealing with a little bit of information and don't have the full picture, but the reaction is coming very swiftly into the equation. We're watching that here in Europe this morning. One of the other more complex themes is that the US has been out of action yesterday for Thanksgiving, will only trade for half of today. So very thin liquidity. And we know when you've got big market and moving events and thin liquidity, it can cause some distortions. So Europe this morning, it is a sea of red, as you can see. We are quickly falling into negative territory. We've dropped 2.2% very, very quickly from the outset. These markets, you may recall, have been traveling around some of the higher ranges on the back of gains in October and November. So there was plenty of room for the descent anyway. But the natural areas of the market watching very, very closely. Technology, whether we see any pickup in the US trade later on today, and some of the various technology names here, but also to the downside. Travel and leisure, clearly one area. Oil, also worth watching. Let's peel away from this big heat map, and you can see it is a little bit slow to open up as a result of some of the volume quickly coming into the mix. Every sector trades weaker, broad-based sell-off as anticipated. Now, one of the other sectors I wanted to call out was banks. Don't forget, we have seen this sector really being reassessed in recent days around talk of a much faster taper and perhaps a quicker lift-off in interest rates, not just in the United States, but in other key economies as well. From Europe, the end of next year was one of the earlier timeframes being touted. All this as we seem to be moving throughout this pandemic. But the news flow today is a real change, a rethink of that conversation we've been having for many weeks now. And you can see banks suffering as a result. 4.6% slump. So it does tell you about how quickly investors have been moving into bank stocks and now quickly moving out of it. Oil and gas. Also another area we've been talking about, very high prices lately, enough so that the US president got involved with other countries to tap strategic petroleum reserves. But the oil and gas price has been falling amid concerns about the demand story. And you can see the sector is down 4%. That is a heavy slump. Travel and leisure rounds out the three top movers to the downside. You can see that sector falling. We had been hoping of some form of resumption using all the tools we have now, vaccinations, COVID passports, more testing, and perhaps COVID pills as well, just to get the sector back into some form of normality. Don't forget, we've not really reclaimed any of the levels since before the pandemic, the 2019 handles. And this morning, this news flow, very, very negative for the sector, tracking lower. Construction, that trades weaker. Retail stocks down 3.5%. It is a key shopping window with Black Friday, Cyber Monday, this whole Black Friday weekend. But the sector is suffering this morning. It is moving south, as you can see. And don't forget, as we talk about a lot of these retailers, also high street presence. We saw much of that impacted with the height of those COVID restrictions last year. And at this very, very early stage, no doubt many in the market wondering what sort of restrictions may be required. Media stocks track lower. Technology, that is still weaker here in Europe. That is down 2.7% at this stage. Only a couple of stocks in the green. Household goods tracking lower. And as you look at these baskets, you can see just about every stock in some of these sectors tracking in negative territory. Utilities, 1.7% down, slightly more resilient, but still steep falls are healthcare stocks. This does beg the question, what comes next for these big pharmaceutical companies? Will they be required to try and re-gear some of these vaccines? Is it going to be possible at this stage? And what's the time frame? What does that do to profitability in the sector? Chemicals, we are tracking lower by 1.4%. I would just add one more point around healthcare, though. Don't forget, one of the more recent narratives was about getting back to some form of normality in the sector, allowing other operations, treatments, procedures to resume. And that had been an area where you'd seen other stocks away from a very narrow selection of big pharma names starting to benefit. But this does really beg the question, what happens from here? A quick look at the boards. We want to take a quick look at the European indices to see how they've opened up. The FTSE 7150, that's down more than 2%, 3.6 coming off the French marker. On the periphery, it is the IBEX down the most, 3.5%, and we're not getting a trade on the DAX.
Yeah, funny old world, really, when two neighbours, two of the engines of growth in Europe need a new treaty to talk about cooperation between the two. But that's exactly what we're getting. The gentlemen you can see on your screen are, of course, Sergio Mattarella and Mario Draghi, the president and prime minister, respectively, of Italy, although very interesting that a lot of people are still talking about Draghi taking over in the Quirinale Palace at some stage and becoming the president, which has so many ramifications. Anyway, stormy old relationship between Paris and Rome. And now we're going to have a signing of a ceremony, kind of a treaty to talk about cooperation in areas from defence to telecoms with France and that gentleman there. So there you've got Mattarella and Macron. That doesn't look very COVID secure, but there you go. Despite the masks, they got masks on. I'm sure that's fine. And then you've got Macron. Yep, same kind of embrace with Draghi there again. Again, I'm not sure what the COVID rules are on that one as well.
Well, they didn't do three, so he did hold back.
Well, yeah. But I mean, I find this extraordinary. So this is the Quirinale Palace, which is called the presidential palace as well. And they're basically trying to put away the relationship behind them. There's been all kinds of problems, of course, whether it was caused by populism or fractional politics in Italy. Some people have talked about key areas such as whether there's been arguments over telecom mergers, whether it's been about defence, whether it's been about ports as well. That one's come up as well. But yeah, so trying to put behind them a lot of those issues and have a new treaty. But I find this incredible that two should be rock solid neighbours, allies, with common thinking, are having to have a treaty between themselves.
It does spell a change in times, doesn't it? And what we've been following in recent months has been Italy wielding more power at the European level. It's not just been France and Germany deciding many of the big issues. Mario Draghi has had a seat at the table. And perhaps this is just symbolic of the fact that he is making headway at a European level, and with Emmanuel Macron, that you've got such a close tie now that they're willing to put pen to paper on a fresh treaty.
I wonder if it's about the optics as much as what's actually going to happen. I mean, I'm told that the AI, cloud, 5G, justice, venture capital, innovative business, macroeconomics, culture and youth are all part of this as well. And very symbolic. He's wearing an Apple Watch there, by the way. Oh, it looks like an Apple Watch anyway, rather than a European technology. Just chucking that one in there. But the point is, this is a bilateral strategy or treaty in a Europe that should be about 27 nations.
Well, let's just go back to what Macron had wanted from the outset of his presidency. He wanted these super European champions that stretched across many industries. And as we talk about making traction at a European level, these are one of the big conversations. How does Europe compete with the likes of China, the United States, and other countries down the track? They need to be working on the same page, having very similar regulation. And we talk about telecommunications. This has been one of the issues. You've got very different regulation in different countries, and getting cross-border mergers to make much larger companies has been torturous. Well, you've spoken a lot about the banks. I mean, that's been another stumbling block as well. So I think having such a warm embrace, having Macron and Draghi there very much on the same page, and now putting pen to paper on the same page is welcome if you're looking at a more competitive Europe down the track.
Yes. Yeah, I just wonder what happens next time an Italian company wants to take over a French port. What happens next time a French telecoms entrepreneur wants a larger stake in an Italian telecoms company, et cetera, as well. But look, this is about a new power block as a time where Herr Scholz is going to be challenged by President Macron, is going to be challenged by integrationists from Southern Europe to accelerate integration, perhaps whether it's fiscally, whether it be on a mutualization of some form of debt going forward rather than looking backwards. These are all big issues as well. So as Europe looks for perhaps a reigniting of the project.
Can I just say that this would not have been possible under previous prime ministers in Italy to see these types of pictures? You think about all the populists, how difficult it was.
Yeah, no, I hear you. I think Gentiloni would have wanted it because, of course, now he's at the commission. I think others may be all right.
I mean, if you think about if Matteo Salvini were in the top job, whether that would be possible. Luigi Di Maio, if you had him as a coalition partner.
You make a very interesting point. Could representatives from Fratelli, Lega, Forza, could all of those have done it? Absolutely not. You're absolutely right. But again, very interesting to see resumption of cordial relations between these two after, as you say, some very difficult times over the last 4 or 5 years. Right, let's go back to these markets. And I've got to say, there is a couple of moves there which are stunning. Karen, do you want to talk us through especially that one behind your head?
It is just extraordinary, isn't it? Take a look at this. We are down 20% on IAG. This is the owner of British Airways. The stock absolutely slumping. It is an incredible move south. We've got double-digit falls on other airlines too. Lufthansa, another one of the big ones, down 11%. Air France is a little bit more resilient here, and that's curious because don't forget, it did very much suffer during the COVID crisis. EasyJet is down 16%. It got 15% off the other budget carrier, Ryanair, so huge slumps across the airline space. Other players in the sector, you can see hotel groups, Intercontinental down 7%, Accor, the French group, it is shedding close to 9%. Carnival in the shipping cruise line business, it is down 14%. It was hard hit, of course, during COVID. And again, it is one of the stocks that is falling aggressively. TUI is down about 9.2%. So stunning moves we are witnessing in this space. Let's just take a quick look elsewhere because this story around the South Africa variant has not just moved equity markets. It's been moving across in Europe. It's been moving other areas too across global markets. And these are the stocks that are exposed to the South African market. Standard Chartered, 5.8% down, and Old Mutual, that trades down 8%. I want to take you to what we're seeing on the Bund too, the German Bund, because bond markets have been moving fairly aggressively on the back of this news flow. You may recall this German 10-year Bund was at one stage sub minus 0.15, in fact, tracking towards minus 0.1. And we were having the conversation what point we may see a break even on the German 10-year Bund. But the very opposite situation now as we talk about heightened concerns around the pandemic again. We have slumped to minus 0.32, so deep negative territory. And perhaps that gives you a sense of the bond market's now scrapped the potential for a rate hike on the horizon. 2022 may have just disappeared off the radar. And you can see right across the yield curve, we have got moves here as well. I want to take you to oil majors. I mentioned before just how quickly this dialogue has changed as we're talking about tapping a special reserves, strategic reserves for a number of nations trying to shore up their supply and tame very high oil prices. We were mentioning that there have already been concerns around the winter months and demand slumping in with business activity falling back. Now we've got this news flow around this South African variant, and the market is saying, well, what we've got here is clearly a challenge again for the demand scenario, and that is taking a lot of these oil majors south. We're down 6.8%, close to 7% on BP, 5.7% off Shell, and you can see we're falling on Total as well. So right across the board, we are slumping. Steve.
Right. Willem Sells is Chief Market Strategist at HSBC Private Banking. Willem, you've got one eye on your camera, one eye on these extraordinary moves we're seeing this morning. The drubbing that certain sectors are getting, what should our viewers do this morning? Good morning to you, my friend.
Good morning. Clearly the market is going to try to figure out whether there is any change in the assumption that the market has been making ever since we had a vaccine, i.e. that you don't really need to care too much about, a lockdown, a temporary lockdown or not. You can look through that as long as you think that the vaccine is going to work. That has been the assumption so far. So that is the news that we need to get. I think you can try to jump to conclusions or you can await that news. What we've been doing over the last few months is reducing cyclicality. And in particular on the industrial side, on the material side as well. We do have a positive view on the consumer, to a large extent because inflation is lower than in the services sector than in the industrial side. The gap between input costs and output costs as well is lower, so less of a margin pressure. And obviously the unemployment has been falling. I think as well that in the US in particular on the consumer side, you should probably have a good, season here around Thanksgiving. But clearly there is a risk to that view at this point in time. So, I would stick to quality, which is what we're doing as well. Those companies that can look through a difficult period if that were to materialize, and those that have the margin power.
In terms of the companies here, and I spoke to Citi about this earlier on and said, look, a lot of the financing issues of companies in the travel and leisure sector especially, they've been solved. But again, they've only been solved if things recover to a more normalized pattern. They can't be solved if indeed the revenue dries up yet again. Should we worry about the viability of any companies, whether it's been the airline sector, obviously, the travel sector more broadly, but anywhere in the market, should we get a serious resumption of COVID concerns and lockdowns?
Again, it's here a question around how long this would last, right? Any sort of lockdown, how widespread it would be. A lot of those travel companies, that are national champions, could get support, obviously, from the government. The disadvantage of being a national champion is that you're very linked to the local economy. It's a question indeed, again, as to whether the vaccine works and whether you get a lockdown. Also, obviously, it's not just the government measures around lockdowns, it's also simply the consumer behavior if the confidence is not there. So it is a difficult, area to forecast. I think quality I mentioned should be defined as margin power, but also should be defined as balance sheet strength as well.
Good morning, it's Karen jumping in. I just wonder what happens to the hawks today. Did they get silenced? To those that were calling for a faster taper, a lift off in interest rates sooner rather than later to tame inflation? Has that conversation just fallen by the wayside now?
Probably, right, until you indeed get that view from the WHO, around whether the vaccines work, etc. The central banks will want to, have more news, take the wait and see approach. I think for 2022, you will, in any case, get a bit of a flip flopping in the market between those concerns around growth and those concerns around inflation. And so there's, if you combine that, there is kind of four scenarios, right? High and or low inflation, high or low growth, and you combine them. So the market will flip flop a lot. That means that There is volatility. That means you need to diversify. Hedge funds are probably a good way. Again, the focus on quality, global diversification, and not being too far from benchmark on cyclicality, etc. So we've broken down the growth sides in terms of what are the areas of growth where we are still optimistic. That's the US. I think in technology as well. On the inflation side, I think commodity price inflation may have peaked. But wage growth is still there, and then the bottlenecks are still there as well. So wage growth should be ultimately good for the consumer. Again, today that's maybe more put into question, but the bottlenecks that are there are a negative for inflation, for industrials.
I remember a couple of weeks ago I was asking about the pandemic winners because we were looking at some challenging winter months, and the guest was pretty dismissive, saying there's a fairly full price in some of these names. It's possibly not worth looking at that much. But today we do have that trade happening, and I'll take you to some of the big delivery names right here in Europe. Delivery Ocado, Just Eat Takeaway, Delivery Hero, they're all surging in the early part of the session. And of course, ahead of the US session, we've got to think about those big technology names. Some of them do have a fairly full price. So, the likes of Amazon, for instance, Apple. But one stock that's come up a little bit from the highs has been Zoom Video, which we know was very much at the forefront of remote working. Do we revisit these names? Do we put the pandemic trade back on?
Well, that's the advantage of that volatility that I was talking about, that flip-flopping of the market, is that, you can have sort of, your favorite stocks in all types of markets and sectors, and to look at these types of opportunities to pick them up on the cheap. I do think in terms of the lockdown stocks that you are talking about, there is a number of they are also supported by sort of more of a structural element, that we've all become much more digitally aware, that we've had discovered those companies and during the lockdown, and that we are going to continue to use them to a very large extent, and that leads to continued growth in many of those growth stocks. We are certainly not saying that 2022 is a year where you need to be full on value. I think there is a balance between value and growth, and in part, obviously, because our treasury forecast is between 1 and 2, just a sideways range. So no threat for growth stocks from the treasury side.
Can I also just ask you to comment on the sort of day we're likely to see ahead on Wall Street? I mean, you worked in the markets for many years, and typically American cousins are really not at their desk. If they come in, they're probably focused on what the retail spending patterns are looking like. What's today going to hold, given we do have a shortened trade as well when those US markets open up later on?
Yeah, I think to a large extent you're going to see what you're seeing in Europe. So it's a sell-off across the board. The bond market, obviously, the treasury market doing very well. We're also the market sentiment was a bit overstretched. And economists and analysts were starting to upgrade less or even downgrade net. So it's normal that you're going to have a bit of profit taking, and then more squaring of those positions. I would hope that they obviously take a bit of the position that we are doing, i.e. Basically saying it's not just an inflation threat. There is a bit of a growth element as well. Clearly growth will continue. We're still in the mid-cycle stage unless this picture completely changes. But to be too cyclical, I think, is not the right position for 2022.
William Sales, thank you very much for joining us today. Much appreciated. I'm just going to take our viewers back to what we're seeing on some of these market boards. And I was just quite quickly charting the French market. And don't forget, we have had such a strong run on some of these markets. So with the plunge that you're seeing today, it does take us back a little bit, but not too far. And for instance, the French market, we have lost all of the gains for November and through really back till October when we started to see that very strong run up. So we've given back that territory, but we are still tracking higher for the year. And don't forget, we had fresh records on both the French and German markets in recent weeks. So we are very much coming off those highs with fairly steep falls today. In terms of the FTSE, we had traveled up to beyond 7,300 points in recent weeks. So we've given back that territory, but crucially, we have remained above that 7,000 point handle. Don't forget, for a number of months earlier in the year, it was very difficult to make much traction above this handle that we're watching today. So we had climbed above that. we are now just reverting back to the lower levels, down 3.3%. So one that we are going to closely watch. And don't forget, as I mentioned, very strong reaction because of the lack of liquidity in global markets. You may see a lot of traders trying to play this story through European markets today. Let's take you back to the airlines. The early reaction was brutal in the likes of IAG. They're in a British Airways. It was down 20%. Some rationality come back and has just re-entered the mix, and you can see down 15%, still heavily in negative territory as we talk about such sizable falls. I think what we've been watching from a European perspective was resumption of business travel to an extent, leisure travel. We'd seen a lot of conferences resume across European markets, and even people from the States, a lot of CEOs have started to fly into these European markets to have business conversations. The question is whether some of this now starts to stall with fresh restrictions and perhaps the use of more COVID tests. We've seen a lot of strict measures come into play across Europe in recent days, even in populations like countries that are highly vaccinated. For instance, I was just in Portugal recently. Don't forget, vaccination rates well above the 80% mark, around 87%. They are even bringing in stricter measures at this point, and that was before we were really discussing the South African variant. So what happens next is still a big question for a lot of these countries, and therefore market performance from here. Let me take you to the big delivery names. Another element here is consumer behavior. What happens as consumers potentially become more cautious? The use of vaccines had brought some confidence back into populations, feeling they could go out and resume their lives as per normal, going to restaurants, bars, cafes. But this news flow today does potentially impact those behaviors and cause more staying at home, more social distancing, even without some form of government directive. So what we've got here, delivery names balancing at this stage, very different names. We've got takeaway names here on the boards, but also one of the big supermarket players as we talk about the delivery of groceries with Ocado. Steve.
Excellent, Karen. Great to have you back on board the show. Coming up on the show, the EU says it could hit the emergency brakes on travel out of southern Africa. We'll discuss this next.
So if you are experienced trader and if you want to trade today, I guess the best trade OCN, Euro Yen, CAD Yen, Pound Yen, Dollar Yen. You look for short. Any three green candle, you look for short. And because in situation like that, all the money is gonna go to the yen. So, and the yen is the second here. So this means you need to sell Aussie and you need to buy the yen. So you sell Aussie yen, Euro yen, CAD yen. Now you don't want to short right here because we already dropped about 200 points. So you need to sell the rally. And if you watch our video a month ago, you know how to trade the big sell-off. So you need to look for a three green candle and you go short. Okay, so this is a good setup here. This is a good one here. You can pick any pair you like. And the same thing for Bitcoin, also oil. I mean, if everything's selling off, so you need to sell the rally. Now is no liquidity, so in US market tomorrow. So I'm not sure unless if the Federal Reserve come and try to save the market, he's gonna put the money on the market like a few years ago, like when is this happened long time ago, a year ago. Like when we sold from 85 to 75. Do you see how big? So the central bank came and he saved the market and we push higher. I don't know if is this gonna happen today, and if the central bank they're gonna save the market.
The World Health Organization has called a special meeting today to discuss this new COVID variant found in southern Africa. The health agency says the new strain has a number of mutations and has so far only been detected in small numbers. The WHO says it is monitoring the impact it could have on vaccines and treatments. The UK has announced it will ban flights from 6 African countries, including South Africa, as a response to the new virus strain. The Health Secretary, Sajid Javid, said the precautions were brought in to prevent the new variant from hindering the recovery.
The early indications we have of this variant is that it may be more transmissible than the Delta variant, and the vaccines that we currently have may be less effective against it. Now, to be clear, we have not detected any of this new variant in the UK at this point in time, but we've always been clear that we will take action to protect the progress that we have made.
We are seeing some fairly big moves on foreign exchange markets. I want to take you to the rand, which fell to a one-year low against the dollar, as Singapore and Israel also joined the rush to reimpose travel restrictions from the region. South Africa's foreign minister says they will engage with the British government to try and persuade it to take the country back off the red list, emphasising how much damage the decision will cause to the tourism industry. In the last few moments, the European Commission President Ursula von der Leyen said her team is proposing to activate an emergency brake to halt air travel from the southern African region due to the variant. Well, Sylvia joins us with more. Sylvia, we are seeing a series of these decisions globally trying to protect populations. Just walk us through what the European approach may be.
Exactly. So concerns about this new variant are very clear, in particular from the European Commission, with the announcement from Ursula von der Leyen that she is telling all of the 27 EU governments to stop air travel from southern Africa because of this variant. European travel rules included this so-called emergency brake, and that essentially allows member states to stop travel from countries where the health situation worsens quickly, in particular if a new variant has been detected, and that is indeed the case at this point. And of course, this comes at a very difficult point for the European countries as well. Let's not forget that various countries in the EU are facing higher cases of COVID-19, and different capitals have also announced new social restrictions. We're in fact expecting Belgium to announce a second round of restrictions later today. So that is the context from a European perspective. And so at this point in time, EU officials are indeed appealing to everyone in the EU that has not received the COVID-19 vaccine to go and get this shot. And that was also the message from Ursula von der Leyen on Thursday.
Vaccination against COVID-19 saves thousands of lives in the European Union. But a new wave is hitting us, and we need to step up vaccination further. The good news is that we have enough vaccine doses. By the end of this week, Europe will have delivered 1 billion doses to our member states. And another important news is that you should take your booster shot 6 months after the original vaccination.
Coming up on the show, do not miss our exclusive interview with the European Commissioner for Financial Services and the Capital Markets Union, Mairead McGuinness, as the bloc takes additional steps towards hopefully creating a CMU. What's a CMU? It's a Capital Markets Union, and it's rather important.
Now, today in the gold, we did a couple trade, 129 and 504. So I'm done with gold trade today. And I'm just looking for Aussie yen, Euro yen, CAD yen, any rally. I'm looking to short. So I'm looking for 3 green candle with 4 red in order for me to short. If I see 3 green candle or 4 and we have green here, 1 or 2, I'm not selling. It must be 4 green or 4 red. So you need 4 green and you must have 4 red in order for me to take a short. Okay, so NQ also, I'm looking for short NQ. You see, we got the sell signal from here, which is very good. We dropped like 200 point. So I'm looking to sell any rally in NQ or YM or ES because we have a long way to go down in the next few days. So you can see we've been going higher for the last 1 year, we never go down. So I guess this is...
European stocks sell off and US futures sink as the World Health Organization calls an emergency meeting over a new...
So this was the top for last a year. So we only down 300 point. So just look for a sell, okay? Was a good setup.
Fed list is rushed and that it's seeking a reversal. It's also crude prices falling, heading deep into the red, with Brent breaking below $80 per barrel on renewed demand concerns and fears of a rising surplus in the first quarter. Plus, you've got French fishermen threatening to blockade the Channel Tunnel and the Port of Calais today in protest at UK fishing licences. Easy job for us today, which is show you the asset classes and show you the really huge moves we're seeing across the board. I'll do a few, then Karen will talk you through a few others. So global health officials have voiced concerns over a new variant discovered in southern Africa. Officials believe the mutation can evade vaccines. But again, there's a lot of research needs to be done on that, though, so I don't want to just scaremonger. And potentially can transmit faster than the Delta variant. The strain originated apparently in Botswana, but has already been identified in 3 other countries and is believed to be behind a near 5-fold increase in cases in South Africa over the past 10 days. So let's just take a look at some of these bourses. We are rooting around trying to find a bit of stability in some of these markets, but the London market, the FTSE down 3.3%. The CAC 40 out of Paris down 4.3%. The Xetra DAX in Frankfurt down 3.5%. The IBEX in Madrid down 4.5%. It's the same story across the region. But below that, at a subsector level, there's some enormous moves, not least in the travel and leisure sector, Karen.
Losing altitude is the story for these airlines today. There had been hope for some form of recovery coming. They've still been largely beaten up due to these pandemic trends. The leisure business travel segment only slightly recovering, still not back to 2019 levels. Now, what we've got today around the Southern African variant is, again, a very challenging news flow. But that said, it is worth noting the direction just in 30 minutes. We were down 20% on IAG as we opened up. We are now down 10%. So we are seeing a minimization of some of those losses. I think one of the big points here, too, is that the market was looking for the resumption of long-haul travel. And don't forget, this has been one of the more profitable segments for the airline industry for many, many years. So a glimmer of hope that we were perhaps getting back to normality on that front has been very positive for these stocks of late. And this story around the variant is negative for that. We're still down 12% on TUI Arger. The Carnival stock trade not picking up much action. It is still down closely to where it was at the start of trade, near on 15%. But we are seeing an improvement now in some of the other big budget carriers. EasyJet, Ryanair, both were down roughly 15% at the start, now 10 and 8%, as you can see. The South African exposed names in particular, it is still a rough old session playing out for some of these names. From Standard Chartered and over to Old Mutual, they are down 6 and 8%, as you can see. I want to get you to the big stock gainers and losers, because it does tell you a very split picture about what investors are doing on the trade to the upside and the downside today. Delivery names are back in focus. Delivery Hero moving onto the boards. Right at the top, HelloFresh, the meal kit delivery business. Perhaps this is a bit of a scene setter for the trade later on Wall Street around those pandemic winners, not just in the delivery space, but perhaps too in the remote working and technology space. Weak ones, and this is also incredibly telling. Carnival is down 14%, so that is the stock right at the bottom, the cruise ship maker. Amadeus, you may recall only about 3 weeks ago, this company finally managed to eke out a quarterly profit. It has had a string of quarterly losses on the back of the pandemic. It is in the technology booking side for the tourism industry. It's down 12% today. Also making it onto the list, a big real estate portfolio, Unibail Rodamco Westfield. This is a story about perhaps changing consumer behaviors. If this variant does take hold in large populations, developed markets in particular, 12% down on that stock. TUI in the travel space is down. This is the airline retailer Dufry. It is down 12%. Rolls-Royce making it onto the boards too. So these stocks, very, very important as you talk about stock-specific trades in a market-moving event like today.
Yeah, extraordinary, Karen. Thank you for that. Right, okay, let's take a very brief look at the Asian markets and where they've tailed off at the end of the session. So they didn't get the full weight of the European declines, that's for sure. But we saw the Shanghai Composite down about 0.5%. Elsewhere, the Hang Seng and the Nikkei losing over 2% apiece. European futures and European markets just following what's going to happen in the US as well. As Karen has mentioned eloquently, there is very little liquidity expected in the US today compared with normal. But the US futures look like this in a moment. I believe we were down 600 odd points on the Dow Jones. It is now down, well, I would say double from where we were at the start of this show over 2 hours ago. So we are now cooled down 840 points on the US blue chips. Right, well, the European Union has taken another step towards building a capital markets union to compete better against the likes of London now and New York, of course, unveiling a third set of reforms in 6 years. The Commission, which after Brexit now has a competitor, of course, on its doorstep, wants companies to be able to raise money easily as they transition to meet climate goals and recover from the pandemic. I am absolutely delighted to say Mairead McGuinness, the European Commissioner for Financial Services and the Capital Markets Union, joins us now. Commissioner, really good to see you in Brussels today. Thank you so much indeed for joining us. We do have a lot of questions for you about a lot of issues, but I really want to kick off, if I may, on the CMU. There was a time when a commissioner called John Hill was really making big progress on CMU. And then for years, nothing seemed to happen after Brexit as well. So simple question for you, Commissioner. Are we now really back on track with CMU, which is so important for Europe?
Well, absolutely. Good morning to you. We are very much back on track. And in my view, we never went off track because having a capital markets union is essential for the European Union. And of course, we have capital markets. They're national and there are barriers between those national markets. And we're trying to remove some of those barriers. And it is important. I mean, it is disappointing, your previous reports about this potential virus mutation, which is alarming. But we know that we need capital for the recovery post-COVID. We also know that in this green and digital transition, all companies need to invest and they need capital to invest. And what we're doing is trying to unblock those barriers to allow for the free movement of capital and to give accessibility and visibility to companies. And we're also including SMEs in this conversation because we know that SMEs rely heavily on banks. We want to have a diversification, if you like, so that they can look to capital markets. So the package yesterday, which we announced, is part of that process, but it's not the end. And I think you will understand that you don't build a capital market overnight. You build it over time, step by step. It is difficult sometimes to remove barriers. So some of the things we're doing next year is to look at insolvency laws across the union and see can we harmonise those, because that can also be a barrier, and taxation and other issues. But that's for the future. What we're doing in this package is, if you like, putting a real impetus into capital markets union. We're talking about setting up a very unique European single access point, information about companies, large and small. Those who report, of course, will report on financial information, that's clear. But more importantly, in this transition, we want them to report on sustainability information. And for smaller companies, they will have the option of being part of that.
Commissioner, I think we're on the same page, actually. I'm saying it went off rack. You're saying it took too long and perhaps the impetus wasn't there, but now it's back again. But that's good news. But how do we get, and this is at the nub of the issue as far as I'm concerned, there is a pool of savings and investments in Europe which is absolutely gigantic. How do we get that efficiently and quickly to the companies where it is needed, to the capital and growth? Because I've spoken to so many of your peers and people like Bruno Le Maire, and one thing that Minister Le Maire made to me, and I think it's a really great point, is that we failed to get the money to those growth companies quickly enough. We failed to do that in France and at an EC level as well. Is this the final part of that jigsaw, Commissioner?
Well, actually, the final part, if there is a final part, is to engage people in the Capital Markets Union. And I think that's perhaps been something we haven't done. So things like financial literacy, which is a key part of my work, is to encourage people to think about their money, because they work for their money, but their money isn't working for them. And you are so right. There are, deposits have accumulated through COVID because those who were working weren't spending. But this money is lying idle. It is an untapped resource. So next year, in terms of a retail investment strategy, we will be targeting those funds to say to people, look, you have money, but it's not working for you. Invest in small or large companies. But in order to do that, I think we have to have citizens who understand how capital markets work and who are comfortable and understand risk and opportunity. But I absolutely agree with you. It has been quite staggering that we have had this enormous build-up of deposits, and yet we have companies that are starved of cash. So there isn't a match here, but there could very well be. And all of the work we're doing around financial literacy, which I think is huge globally, because many people don't have the skills or the confidence to check in on this area. So it means that they don't benefit from a potential investment opportunity. So there are things we will be doing next year, and we have already done, to look, for example, on long-term investment funds, where at the moment they are restricted for retail investors. They have to put in 10,000, but we're removing some of those, if you like, barriers for those who would like to invest in these. And when we're talking about long-term, of course, this green and digital transition is a long-term investment in some areas like energy or transport. So yes, this is a moment where we do need to step up our game. But in doing so, we just don't talk to those who are big in the system, who understand it. We need to talk to people, citizens across the member states. We need them to understand that the work we're doing around information about companies, they will have access to that. So if they're making decisions, they can look at who and where they would like like to invest their money. And therefore, an understanding of how the system works is absolutely vital. But this does take time. And I think you are right. There is an urgency about what we're doing now, not only because of Brexit, which you referenced. Of course, when UK was part of the European Union, London was our financial centre. That's not the case today. But I think the pressure comes from knowing that there is capital that has not been utilised. There is huge need amongst SMEs, corporates for investment. And it's also fair to say that we have made progress. We are seeing developments on the Capital Markets Union which are positive, but we need much more to happen.
Commissioner, can I circle back to the news of the day around this Southern African variant? Because already market participants are trying to work out vaccine efficacy from here, how long it would take vaccine makers to regroup and come up with some form of a vaccine that can target any new variant. What does it mean in terms of the health and the resilience of the European economy? Could they withstand another downturn here, even if another recession were just around the corner on the back of this crisis?
Well, I think the first thing is, what does it mean for global health? And it is alarming what is emerging. And, South Africa has been very quick to give us this information. So we need to follow up in terms of our precautions that we take here, including around travel. I think for our economies, of course, if there are further restrictions, should this escalate, which we hope it will not, then you will probably see some impacts. I'm listening to your market reports this morning. So obviously there are jitters here about what might happen. I think we need to understand perhaps that we are better placed than we were when the first wave hit us, this COVID-19, where we were completely unprepared, where we saw terrible things happen across our member states. We have come a long way in terms of European action coordination, both in terms of protective equipment in the beginning and then development of vaccines and rollout of vaccines. Of course, the big challenge now is to understand, can we develop another vaccine? Should that be needed to tackle this particular variant? But as you know, more than ever, because you report on these things on a daily basis, markets are impacted by many things, including public health issues. My only word of optimism on this front is that we are better prepared. We know how to deal with a pandemic, which we are still dealing with. We do talk about a post-COVID recovery, but of course, if there is a variant and it's not yet of concern, but should that be the case, then there will be impacts on how companies operate. But extraordinarily, I think, we saw companies cope well. We saw people working from home. Even in this building here in the Commission, we were able to keep our system working. I think the sector you mentioned, travel, tourism, this is a sector which unfortunately gets heavily hit when we are restricting movement or when there is this, if you like, caution around gathering together. And of course, we're coming up to Christmas. And I do think that lots of us thought this Christmas would be perhaps a nicer, easier Christmas than last Christmas. But maybe we should all realise that what we're dealing with now is not going to go away overnight.
Right.
And therefore, we should listen to the health advice, get vaccinated, get your booster, listen to what's coming next. And above all, let's just try and work together. And I think what we've learned from this is that we need global coordination around vaccination. Europe is very engaged in the global effort, and we will equally continue to be engaged, whatever emerges from this latest variant.
Commissioner, if we do have another downturn, do you have concerns that we're out of firepower on a fiscal and monetary side? We've racked up huge debts on the back of this crisis, and monetary policy, surely we're as low as we can go. We've printed as much money as we can print at this stage.
Yeah, well, let's not go down that track just yet, but let's just observe a reality. And I think if you look at our banking system, it was well capitalized going into this crisis. It was part of the solution. It allowed the rollout of national supports towards businesses, towards citizens. The situation, of course, is that debt levels have increased in member states. But when you are dealing with an unprecedented public health crisis, in my view, the correct measures were taken both at European, in terms of monetary policy, and at national government level, and it was well coordinated here within the Commission. So we did the right thing because we didn't allow for a crash to happen, which would have been, if you like, added to a really serious public health crisis. What will happen next, I think we should be cautious about predicting until we know more. And I think that will emerge over the coming days. But we've learned our lessons, and therefore I think we should be much better equipped to cope with whatever comes. And I mean, the most important thing is public health. health. I think we perhaps underplayed that in our past policies before COVID hit us, with an extraordinary bang. We've learned the need for investment in public health and having the resources, the personnel. And I think that's where the world may be stretched a little, is having the right personnel to deal with these problems.
Sorry to butt in, and I've got one more question. I wish I didn't have to ask this question. Aren't you just sick of both sides threatening each other and warning each other in the latest Brexit rows? Is there any chance that we're going to get a rapprochement between the Commission, the Union, and indeed the British over the latest rows, and which of course is affecting the island of Ireland so severely?
Well, look, I mean, to the point of your question, of course, it would be much easier if Brexit was done and if all of the issues that are not resolved were, completely resolved at this stage so that normal relationships would resume. In fact, I would have thought that would have been the case. But look, we're coming almost to a year when Brexit happened. I'm fully aware of the situation in relation to the protocol. My colleague, Vice President Šefčovič, is working really hard with his UK counterparts to resolve these issues. Interesting report from the President of the Chamber of Commerce in Northern Ireland, a speech which you should look at and perhaps invite him onto the programme, where he says there are unique opportunities for Northern Ireland business because of the protocol, acknowledging that there are difficulties. We can resolve those. We put forward the way forward, but listen to the voice of business. And perhaps if we listened more to the voices of citizens and businesses, rather than the political voices, we would have this resolved. We are duty bound to resolve this issue. We signed an international agreement with the United Kingdom in good faith. The German government, the new German government, has insisted that, as all governments are, that these agreements must be implemented. But we have put forward a very good package to tackle those specific problems for Northern Ireland business. And the business community, by and large, have welcomed. They'd like to see a bit more flexibility. We're in the negotiation, and we're asking the UK side to step up to our level of ambition. We'd like to see this resolved before Christmas. I gather that it may linger into the new year. Given what we're talking about in terms of the need to recover, the need to invest in the future, the concerns around public health, wouldn't it be better if we could conserve our energy towards those big challenges and get Brexit done so that we can move on and deepen our relationships, which will be essential?
I hear you. There's a lot of echoes. Wouldn't disagree with you on this side of the channel and the Irish Sea as well. Commissioner, thank you very much indeed. By the way, I've already started looking at what you just told me to do, my homework, and I was looking at Paul Moynihan's speech as well, and it looks very interesting, and we will try and get him on. So, Commissioner, thank you for your time, and I know you're really busy. It's been great speaking to you. Mairead McGuinness, who is European Commissioner for Financial Stability, Financial Services and the Capital Markets Union. Karen.
Let's get to Salim Abdul Karim, who is former chair of the COVID-19 Ministerial Advisory Committee in South Africa. Thank you very much for joining us today. Just sum up the threat of this new Southern African variant from your lens. Professor. We don't seem to have the professor.
It's a great guest. Unfortunately, we've lost him.
Yeah, I mean, we are all trying to debate what this means. I mean, don't forget a variant that evades vaccines has been the black swan event for markets. So we are seeing a reaction today. The DAX is down 3%.
We don't know
3.7 off.
There's been lots of scaremongering throughout, and I think that's the key as well. And I think it's our duty as journalists to say we don't know that's the case.
Right.
There are people who are questioning. So the scientists will be poring over the latest epidemiological information, and we're working very hard on this one as well. But again, we could be in for a very swift rebound if that is just not the case.
Exactly.
What I will say is,
we want to know what this threat is, and we want to know just generally what we're dealing with. I know a number of market participants already moved very quickly to say, well, if it is a variant of concern, and if it's more transmissible, if it can skirt around some vaccines and reduce the efficacy, what's the response from a developed market? Do we see regrouping of vaccines? And already there are some reports saying it would take a number of weeks to come up with another vaccine, then to get it back into supply and distribution. We're looking at more weeks after that.
Look, Professor Sarah Gilbert, I've got to go to break, but Professor Sarah Gilbert is one of the few people I really want to listen to in this throughout. She's the one who's part of the team behind the AstraZeneca vaccine, Cambridge University, Oxford University vaccine as well. She says, look, most of these vaccines we can tweak very quickly, very aggressively to match new variants. Yeah. Right, okay, so we're going to take a short break. In fact, we can take a long break because it's the end of Squawk Pods. God, Is that what it was?
We're going to have a 2-day break, I think.
Yeah, well, maybe. Who knows, Karen? Who knows? But you will be up after that very short break on street signs. But thank you very much indeed. And if you are trying to enjoy your elongated holiday because you've been celebrating Thanksgiving, I hope you get to do so. Have a great weekend despite this horrendous news flow. And we'll be back, of course, first thing, 7 CT on Monday.
We got like 3 candle, 4 candle here in Euro Yen, also in Nasdaq, NQ, CAD also. We start getting some rally, maybe because London open or something. So you can pick anything you want. I mean, it doesn't matter. NQ, dollar yen, pound yen. You can take short any currency do you like. If you like Euro Yen is good, OC Yen, YM. I can see the yen pair getting smaller. So let's see if this gonna stay. If it's gonna stay like this all day, this means we have a big sell-off. You see, here you go. Now we start to see selling off. If it go higher, you just need to keep your eye on this.
Good morning and welcome to Street Signs. I'm Karen Cho and these are your headlines. European stocks sell off and US futures plunge as the World Health Organization calls an emergency meeting over a new COVID variant discovered in Southern Africa, which officials fear can evade vaccines and transmit faster than Delta. Travel Tank says the European Union, Singapore, Israel and the UK ground flights from the region. South Africa's foreign ministry says the UK's move to put 6 nations back on the red list is rushed and that it's seeking a reversal. Crude prices head deep into the red, with Brent breaking below $80 a barrel on renewed demand concerns and fears of a rising surplus in the first quarter. And French fishermen threatened to blockade the Channel Tunnel and the port of Calais today in protest at UK fishing licenses.